I am now the #1 ranked highest P&L trader on the planet as verified by Kinfo. I've made over $16 million trading, and we're gonna pop up all the proof right here. So I've been getting a lot of questions of how I got to this point. So I'm gonna talk to you about what got me here from being a Starbucks barista to now being the #1 trader in the world. So it all started 11 and a half years ago. And I had a girlfriend at the time. Maybe I was making around 200 bucks a week after taxes. You know, I'd take $50 or $60, put it into my gas tank, take another 50 bucks with movie tickets and snacks, take her out to the movies every week, and maybe I was left with a little bit less than $100 in my pocket by the end of it. What ended up happening is my girlfriend broke up with me to be with a rich guy, and it totally devastated me. At that moment, I always told myself, I have to find a way to get rich to get back at her. Fast forward, I started doing a little bit of research and started finding out that the two best ways to make money in America were real estate and the stock market. Real estate has such a high barrier to entry to get started. You would need hundreds of thousands of dollars to get started, and I didn't have that. But stock market, you could open up an account with as little as like $500. So I was like, this is perfect. So I opened up a stock trading account, and I ended up just doing what I thought was the right thing to do. You know, I saw Warren Buffett and all these people, these investors, start to just buy stocks and hold. You know, when I was buying these stocks and holding, they were not moving. Then I discovered something called day trading, which is you could go in and out of the stock within the same day. When I first started, I didn't know that that was even possible. I thought that the only way that you could get involved in the market was through long-term investing, right? Because that's what everyone else does. So when I discovered day trading where you could get in and out of a stock, I was like, that's kind of cool, right? I don't have to hold overnight. You know, maybe these stocks are moving so much that I can make 10% in a day versus 10% in a year. So I started buying stocks just like anyone else. I would start by buying the breakout, right? Because that's what we're all taught. Buy the breakout. It's that easy. And every single time I bought the breakout, the stock would go straight down. I thought I had this magical talent of every single time I bought, it would go straight down. I was like, what the hell is going on here, right? And then I discovered something called short selling, which is making money when stocks go down. And I was like, dude, this is perfect. Instead of hitting the buy button, if I just hit the short button, I'm gonna be rich. So I remember my first short trade ever. It was on a stock called VGGL. It doesn't even trade anymore, right? And I remember shorting 2,000 shares at $4 a share, went down 50 cents. I made $1,000 and I was hooked since. So just as a little bit of a timeline, my first year trading, I lost money buying the breakout. By my second year trading, I started breaking even by learning what short selling is. And then by my third year trading is when I started to consistently make $100 to $200 a day. Now fast forward 11 years later, I've made $700,000 a day. I've even lost $450,000 in a day, right? So it's not all sunshine and rainbows. So that's kind of how I started my journey. I started as a modest Starbucks barista. Every single time I bought a stock, it would go straight down. And then all of a sudden I discovered short selling. I changed my mindset and I started to realize that, hey, maybe there's actually a really big edge here. But eventually what ended up happening is I didn't really have a strategy. I didn't really have a process. I didn't know what the hell I was doing. I was just hitting the short button blindly. And you know, anyone could get lucky, you know, shorting random stocks, but without a strategy and without a process, how can you expect to make money? So by my third year is when I finally started to discover a pattern. I started to finally have a strategy. What I would end up doing is I would look at the daily chart on these stocks. I would love to see the stocks that push up and wick back down. Push up and wick back down. Why? Because history tends to repeat itself. Whenever I would see the daily chart of these stocks that would push up and fail, chances are the next time that it pushed up, it would probably fail. So I would only wait for that pattern to show up, and every time that pattern showed up, I would attack. That's kind of what got me to be consistent. Now I have a pattern, now I have a strategy. What more strategies can I discover? What more patterns are out there? And that's where my mentor Bao came into the story. So Bao was a very successful trader, and he was giving a speech in Las Vegas. And I wanted to go see Bao talk. I was 21 at the time, and I talked to my dad, and I was like, hey dad, you know, I want to go to Vegas. There's a really big trading conference out there. You know, I want to network with these traders. I want to learn new strategies. I want to get better. My dad's like, trading is a scam. What the hell are you talking about? The reason why my dad thought that way is because he had a lot of stocks in 2008. He had Netflix under $100, Facebook under $100, Apple pre-split adjusted at a very low price, and he ended up selling during 2008 because the world was crashing, right? Financial media said, you gotta sell, you gotta sell. The economic collapse is happening. The point is, my dad was very skeptical about the markets. He always thought the markets were a scam. So he's like, you know what? I'll take you to Vegas, but I'm gonna take you to Vegas to show you that it's a scam. It's like, okay, as long as we're going, like, let's do it. So we went to the conference and everyone was talking, but I was really most excited for Bao. I've been following him on social media. I've been following him online for a while. and I just wanted to see what he was all about. Here comes this guy in shorts, t-shirt, and flip-flops, right? I think he was probably even making his presentation 10 minutes before he was going up on stage. Anyway, he came on there, and what he showed was a P&L calendar. He showed his profit calendar. Out of 250 trading days in the year, he lost less than 10 days. He was making hundreds of thousands of dollars a week and speaking about it so eloquently and so positively, as if he had an edge on the market. And by the end of the conference, my dad saw Bao, and he's like, this guy seems like the most legit guy. I can't believe this thing is actually real. So at the end of the conference, I kind of approached Bao. And I was like, hey Bao, you really inspired me. I've been following you on Twitter for a while. And I just want to say thank you for everything. And here goes Bao. He's like, yeah, sure kid. Yeah, have fun. Nice to meet you, whatever. I'm going to go have a drink. At 21 at the time, I'm like, okay, I just met, Bao. He's a superstar, right? Anyway, fast forward a couple months later, Bao was still posting on Twitter. He's still posting on social media. And unfortunately, he was going through a really bad divorce at the time. And he didn't really have much people to talk to about that divorce. And here I was, just someone to kind of be his friend. The thing about Bao is he was very good at technical analysis, the study of reading charts. I was very good at fundamental analysis, the study of reading company filings. As we became closer, I helped him read filings more, and he helped me read charts more. And together, his weakness was my strength was his weakness. We kind of got together, became really close friends, and together we started refining our strategy. We started creating new strategies from patterns that we were seeing together. One of the biggest patterns that we saw occur all the damn time was something called the zombie rule. So Bao and I would trade from 9:30 a.m. to 10:30 a.m. market time every single day. We would lock up $2,000, $3,000, $4,000 at our height, right, when we were trading so well together. And what ended up happening is this. After 10:30, Bao and I would push for more. We would push to make even more money because, hey, we were up on the day. Let's see how much more money we can make. What ended up happening is this. People think that in trading, the more you trade, the more money you make. That's not true. I'll give you an example. When you're at the casino, do you make more money when you walk away from the tables or when you keep playing? Obviously, when you walk away. The market is designed the same way. If you keep trading and keep trading and keep trading, the market's gonna find a way to take your money. We discovered something called the zombie rule. So we would make money every single day, and after 10:30, we would start to lose our profits. We would go for all-day holds, we would start scalping random things, and all of a sudden, our $4,000 days turned into $3,000 days by the end of the day. And then I started kind of recognizing something. I started recognizing that these stocks that end up pushing up and coming back down, around 10:30, 11, they consolidate, the volume shrinks, and the algos push the stock price higher, right? So we created something called the zombie rule, where stocks come back from the dead like a zombie. So I started doing some math, and I said, wait a second, if I just stop trading at 10:30 a.m. every single day, I'd have an extra $1,000 in my trading account. An extra $1,000 in my trading account over the years, an extra $250,000. So a lot of traders have this false sense that you have to be trading every second of every day to make money in the markets. If anything, the less time you trade, the more money you make, because the market has less of an opportunity to take that money away from you. So the zombie rule was one of the single biggest things that we discovered, that we worked on together, that took my trading to the next level simply by not giving the money away. So a lot of people always ask me, what are some common things? Like, if I was a brand new trader starting today, starting right now, I have no money, what the hell should I do? I think it's very simple for anyone to make money in the markets, but the hard part is actually keeping that money in your trading account, right? How many times have you made money only to give it away by doing random things? So for me, I think the biggest thing that traders don't talk about enough is risk management. Everyone talks risk management, risk management, risk management. What do they explain what risk management is? You can say risk management, but can you explain it? So let me explain to you what risk management means to me, right? So risk management means to me is having certain guardrails in place so that, God forbid, if something goes wrong here, that your bank account isn't hurting as well. Trading is a sport. It's not a physical sport, it's a mental sport. And all it takes is one time for your mental to be screwed up for you to have a horrible day trading. So you need to have guardrails in place. Let me give you an example. When you're at a hedge fund or a professional prop firm, not these funded account nonsense, when you're at a professional hedge fund, they have something called a risk manager. They have someone whose sole job is to sit there and manage risk. As normal retail traders, we don't have risk managers, right? We don't have someone tapping on our shoulder saying, are you all right? Is everything going okay? What's your plan, right? They have these at hedge funds for a reason. So as traders, we need to create our own risk managers to become professional traders like the people on Wall Street. That means that you need a max share size limited by the broker on every position. So that way you can't just add and add and add to a loser. Let's say, for example, your max share size is 2,000 shares. Once you hit that 2,000 share cap, you can't keep adding. That's a form of risk management. That makes sure that you're not getting way bigger on your losing trades. Number 2 is you need a max loss auto liquidation. What does that mean? That means that if you hit a certain number on the day of a loss, your broker kicks you out of the day, right? How many times have you been in a loss where it's like minus $1,000 and your stop is $1,000 and you're like, you know, let me just see what it does. And it goes to minus $1,200. And you're like, okay, now if it goes down to minus 1,000, I'll definitely get out. Then it goes to minus 1,500 and you're like, okay, if it goes down to 1,100, like I'll take it off. And then it goes to minus 2,000 and you're frozen. You're a deer in headlights. You don't know how to react, you don't know what to do, and all of a sudden that $2,000 loss turns to $5,000 loss and you blew up your account. So having a max loss auto liquidation at the broker level makes it so that you are never a deer in headlights. It makes it so that when that number hits, regardless of what you do, the broker kicks you out. Now, how do you set your max loss auto liquidation? What number should I use, Alex? Your max loss auto liquidation should be no more than 2 days worth of trading. That means that if you make $100 a day, your max loss auto liquidation should be no more than $200. Why? Because it'll take you 2 days to make it back, right? If you're making $100 a day and your max loss is $200, that means on your worst possible days, on your days where you're completely out of control, you're gonna lose 2 days worth of work. The problems occur is when traders who are making $100 a day set their max loss auto liquidation to $5,000. It's gonna take them months to make it back, man. It makes no sense. So having these risk management parameters in place is going to help you. Finally, is something called having a process. And a process is a fancy word that people throw around, right? Trust the process this, the process that. A process is a routine that you can repeat every single day that'll show you how to consistently make money in the markets, right? So for me, here's my process. My process starts with me waking up at 6 a.m. The first thing I do is I check my phone. I see, is the market gapping up or is the market gapping down? The reason why is because Trump is kind of crazy, man. You never know what he's going to say. So I want to wake up and see what the overall market is doing. Then I run over to my espresso machine because I got to have an espresso. Without my coffee, I am not a functional human, right? I turn on my computer back here and then I check the top percentage gainers on the day. I see what stocks are up the most on the day. As a short bias trader, I am looking for the stocks that are up the most on the day because they have the most room to come back down. After that, I read the news. Is this company up on bio news? Is the company up on crypto news? Or is the company up on no news at all? Because that happens as well. After I do that, I look at the filings. Is this company known to dilute shareholders? What is dilution? Dilution means when companies are introducing more shares into the market, increasing the supply of the market, which would then bring down prices. What does that mean? Let's say there was only 100 of these watches that existed. What would happen if the manufacturer comes out and says, you know what? Instead of doing 100 of these watches, I'm gonna bring out 1,000,000 of these watches. The value of this will go straight down. So a lot of companies, they dilute shareholders by introducing stock into the market, which is very bearish. After I find out if they have dilution, I go to the daily chart. I look to see that same pattern. Is the stock pushing up and coming back down on the daily chart? Is the stock pushing up and coming back down on the daily chart? If it is, great, it fits my criteria. Then I'm looking at the pre-market action. Usually as a short bias trader, I don't want to short the stock that keeps going up. I want to short the stock that's made its first move up, kind of coming back down, and the bounces are failing. Think of it as like a bouncing ball. Bounce a ball and every bounce gets weaker until the bottom falls out, right? So what I'm looking for pre-market is stocks that not are pushing up, but stocks that pushed up and came back down. After that, I draw my lines using technical analysis, I draw my resistance, and as soon as the market opens, if those stocks pop to my resistance level, I short it, I take the money, and I run. Just this month trading, I'm up well over 6 figures doing it, and we'll pop that up on the screen right now. But that's pretty much some of the basics of how I became the #1 verified trader online. I also trade live every single day in front of hundreds of traders. So if you're interested in watching me trade live, I'll put a link to watch me trade live for free for 30 days. And if you like these videos, leave a like, leave a comment, subscribe to the channel, and let me know what more videos you want to see. I'll see you on the next one, guys. Thank you.